Hello, and welcome to this week's episode of Copper Bottomed, where I talk about the copper market in brief and a few highlights of the copper market of the week in detail. Well, not in detail, but specifically. Right. So this week, I'm recording this at the end of the week, but earlier in the week, the International Copper Study Group, the news kind of gradually was filtering out across the market that the ICSG were expecting surpluses to increase to almost 500,000 tonnes of copper in 2024. And the copper price reacted pretty poorly to that. You can see how they see that. They see 3.7% growth next year, and that's really as a function of these larger mine expansions which are coming on. I mean, we're seeing Kamoa-Kakula, the Ivanhoe mines project just kicking ass. I mean, that's doing so well. But you can see here Malminskoye and Al-Malik. So these are kind of some Central Asian quasi governmental or kind of parastatal companies which are forecast to produce a lot more copper. Now, interestingly, ICSG say that they are not they're not brilliant at forecasting copper prices. They do say that they look at the economics and they look at the demand side and they look at the supply side, but they often get it wrong. I mean, they say that in their press release. Actually, this news release came out in early October, but it's taken a couple of weeks to filter through to the market. As bearish for copper it is to show that there's a large supply-demand surplus next year, it's also worth noting that there were considerable surpluses forecast for 2023, but they've actually downgraded that to 1.9% growth. So it's really interesting to see that frequently there's an increase in production forecast, and copper, being copper because it's a mature industry and grades are typically low, often disappoints in terms of its growth delivery. So let's keep an eye on that 3.7% growth. Certainly Kamoa-Kakula is going great guns, but it may not be that deficit is as large as 467,000 tonnes. And also this week we had China GDP, which surprised on the upside. So the copper price is actually holding quite firm at around $3.59, $3.58 per pound. So I'm not kind of gung-ho raging bull for copper in 2024. It is likely to be in surplus, but it might not be such a large surplus as ICSG forecast. Anyway, on to the weekly highlights. So on the 16th of October, which is now almost a week ago, the Junior Mining Hub Weekly came out, and it had these copper intercepts as the highlights of the week. So Double View Gold Corp, 506 meters at 1%, a DLP 970 meters at 0.5, and so on. And I'm just going to go through these on a case-by-case basis. So let's look at what was on paper, the headline, 506.6 meters times 1.09 copper for 552 kind of gram meters or percent meters. This is Double View Gold Corp. Market capitalization of $116 million and share price of 63 cents. And you can see that over the last 2 or 3 years, it's been picking up traction. Yes, it had a spike here, but actually over the last 2 or 3 years, it is gaining traction. And it's put out 2 or 3 similar style releases of kind of several hundreds of meters at around 1% kind of this copper equivalent figure. And the share price has responded. I don't really know Double View Gold, but I went and had a quick look at the news release. So I've kind of copied just dropped the first page of the news release here. Double View reports strong mineralization and extends the Buck zone of the Lyle deposit another 250 meters southwest. Read through this, and what was interesting is that in their summary page they don't actually put the grades. So this is okay, there's in this bold bit here, drill hole 54 contains assays with a higher gold content of 0.43 grams per tonne, when generally balanced in comparison with copper 0.32 and scandium 27.3 grams per tonne and cobalt 136 grams per tonne. with a 1.29% copper equivalent intercept over 143 meters. So, and then down here, they talk about the upcoming Q1 to 2024 resource estimate. Now, under TSX rules, you cannot use a copper equivalent figure until you've got a resource estimate out and you understand your payables on your metals. So I was just a little bit surprised by all of this. And the CEO goes on to talk about the project having an outstanding resource with exceptional metals extraction and recoveries. And all holes drilled in 2023 are expected to be included in the forthcoming resource evaluation. Now, that's interesting because if they're still drilling, then it's very unlikely that they're actually going to stick to a Q1 2024 resource estimate, because it takes a while to get the drill holes completed, them logged properly, all the information pulled out of it, the assays returned, interpreted, and then that goes into a resource estimate. So I would expect that resource estimate not to be ready until the middle of the year. So I would like to see from the company a little bit more clarification of when the cutoff on the drilling is and when the resource estimate is coming up, because I can't quite square that. And also, when you look at when you go down into the drill data, it doesn't seem as if this is a copper-rich deposit. And the metal equivalents, I mean, in the notes to the table, it says metal equivalents should not be relied upon for future evaluations. Yes, the company has done some metallurgical test work. Here we go. It's actually looking at a scandium recovery of greater than 90%, but I don't know the scandium market. I don't really know what the scandium world is. So this market capitalization of $116 million is, I don't think it's being driven by the copper price or by the copper content, because it doesn't look like a copper project. So I would like to see a lot more clarification about scandium, and I would certainly I'd like to see no more copper equivalents being used, because I think it's misleading. It doesn't help. So interesting. Obviously, the company's got traction. Share price is on an uptrend, but there's so much that I don't understand about it that I think the company could do better. So I'd like to see more clarity on the timing, and I'd like to see more clarity on what's actually driving this and the scandium market. Next up is DLP Resources, which has got a market capitalization of around $42 million. And the headline that was captured by the algorithm shows 971 meters times 0.53 copper equivalent for 514 percent meters. And the headline, there we go, you can see it right there. This is from the news release. DLP Resources intersects 366 meters of 0.81% copper equivalent within 971 at 0.53 copper equivalent. Now, I repeat again that the TSX guidelines says that junior companies or exploration companies cannot report copper equivalents until there's a resource base with known metallurgical recoveries. So here we go. If you actually look, and there's a reason for this, if you look at the actual grades here, which I've underlined in red, you can see it's 0.07% copper, 0.14% moly, and 0.66 grams silver from 716 meters to 1100 meters, more or less. So there's your 366 meters. It's not really a copper resource. So what I'd like to see in the future is this company not using copper equivalents, because it's misleading. It doesn't help investors. And you can see in the share price graph here that the company's got a bit of traction. It's lost a bit in the last 3 months, but that's not really surprising, because it's been such a tough time for the junior market. But I mean, this copper equivalent thing is a real problem. Even in the notes to the drill results, it says, or to the highlights, it says the copper equivalent grades are for comparative purposes only. Moly, copper, and silver values are uncut, and recoveries assumed to be 100% for the entire drill length. The project is at an early stage of exploration, and conceptual recoveries of copper, moly, and silver are assigned to the copper equivalent calculation. So I don't understand what it is. Is it conceptual recoveries or is it 100% recoveries? And certainly that shouldn't be done anyway. So this whole copper equivalent conversation is a can of worms, and I really, really would like to see DLP resources to go up in my estimation by not using copper equivalents. So, and that's even before we get onto the subject of where Aurora is in Peru in terms of its workability, in terms of the infrastructure, in terms of the water situation, the permitting situation, the social license situation. I don't know enough. What I do know is that this doesn't quite work for me yet because of this emphasis on the copper equivalents. Now, moving on, we come to Hercules Silver Corp, which does things differently. There you can see the market capitalization is $115 million, and that's principally because the share price has more or less doubled in the last couple of months as they've drilled through the epithermal silver veins into a potentially copper porphyry system. And what you can see here is this is how you should report. Hercules Silver intersects 185 meters of, and you do it by metal, 0.84% copper, 111 ppm moly, and 2.6 grams per ton silver. So there's no copper equivalent here because that's how you should report polymetallic mineralization as an exploration company. So full marks to Hercules Silver for getting this right. If I want to be very picky, and I will be, Hercules Silver rebranded this company just 10 months ago, or earlier this year, from Bald Eagle Gold to Hercules Silver. And the golden rule about naming exploration companies is that you should not stick your commodity in there, because that is just a label. And what happens if you find something else that isn't your label? So Hercules Silver, guess what? It's found copper. So that, I mean, goodness me, exploration companies, please just don't do this. They're going to have to rename the company again. But anyway, rant over. What they've done in the geology is actually really interesting. Okay, so they've 185 meters of 0.84% copper. That's a really good grade in today's exploration world. I mean, so many companies are reporting 0.2, 0.3, 0.4% copper. 185 meters, this is a zinger of a hole. And it's only, okay, it's not from the surface, but it's 246 meters to 431 meters. And including in that, you've got 45 meters at 1.9% copper. Interestingly, there are over 300 historical drill holes in the shallow system, and this system is completely blind and open in all directions. I mean, this is what you want for exploration, and it's almost no surprise that you've seen this extraordinary share price response in the last week or so. So this news came out on the 10th of October. Here we are, kind of about 10 days later. Another really cool thing that this company did in this news release was that they put a link to all of the core photos. And if you look through those core photographs, you can see all of the alteration, you can see the veining. It's really good. And what I particularly like is that the share price moved in the week after those photos were published. So it's almost as if the market went through looking at the photographs, looking at it and just trying to understand what's going on. And they liked what they saw. If you look at the vein density and the intensity of the alteration, and you ally that with the assay figures, this looks pretty exciting. It's also a very good cross section here. This is nice and clear. You've got the geology actually kind of at a shallow dip. Now, what that's interesting to me is that it's not subvertical. Typically, these things are placed subvertically. You might get some kind of lateral movement. So either this whole thing has been rotated, or this is a feeder off another system. So it really opens up the play here. So this is a play opener, good hole. I completely see why the share price is where it is and where the market capitalization is where it is. What I would like to see from this is more drilling, and I'm sure that they will do that. So it's in Idaho. This is absolutely why we do exploration, because these are the targets that you want to drill, and this is the work that you want to see. I would say 10 out of 10, apart from the fact that they chose the name wrong. But over the minor peccadillo of inability to name an exploration company, this is really good work. So I'd like to see more of the same, please. Right, moving on to C3 Metals. This about the same size company as Hercules Silver, a market capitalization of 48 million. Sorry, about the same size company as DLP Resources, about $48 million here. C3 Metals have got these assets in Peru, and they've also got these assets in Jamaica that they're drilling at the moment, Provost, and in the Bellas Gate project. This was interesting. This was really interesting. They say the drill hole ended in 1.1 meter at 1.27% copper and 4,000 grams per ton silver. So the hole intersected 112 meters at 0.35% copper and 0.13 gold. They do put in a copper equivalent figure, but they don't lead with that. Although that is what the algorithm picked up for the Junior Mining Hub Weekly. So this is 113 times 0.5 to get 51% meters. But this is building up to be quite a system. So this is extended by 150 meters along strike. You've got 400 meters at 0.37% copper and 0.19 grams gold. It feels as if they're onto something. The grades at the moment and the depths are not screaming, yes, this is definitely going to be economic. There are so many factors and parameters around that need to be included, but it's certainly encouraging. And the Dan Simons, the president, the CEO, he says, yada, 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 important step out, high sulfidation epithermal veins, overprinting porphyry mineralization demonstrates the presence of a multi-phase system with potential for both bulk tonnage copper, gold, and high-grade precious base metal vein deposits. And then he goes on to say, while two recent holes failed to reach the target depth due to drilling difficulties in fault zones, we are very confident. So he's highlighting the fact that you've got this kind of polyphase, this multi-phase system. He said that some of the drilling didn't get down to the depths that they wanted to. I would say that this is kind of an opening up of a system. It's hard for a junior company to do this. They're doing really well. Obviously, they're going to be cash constrained along the way. The market hasn't really reacted yet. It's still kind of pretty sideways. But keep going is what I say. I think they're onto something. It's hard to know what the grade's going to be. It might be economic, it might not. But this is, I would say, good kind of honest exploration work in progress. It's not easy. It's incremental. It's a process. And I think they're doing all the right things and on the right track. And the share price may respond if they kind of start to understand the vectors and the drivers, and if they can target in on high grade mineralization as they learn about the geology, then there could be a price response. So really interesting. Right, coming to some minnows now. Aston Bay Holdings, market cap $13 million. If you look at the share price, it's gone sideways for an awfully long time. I didn't know about the company. I went and had a look at it. American West Metals have got the majority of the economics. This is a project way up north in Nunavut, right in the far north of Canada. There's some good grades. There's some really interesting geology. I think, given the size of the company, which is a minnow, and the geographical challenge of the area, this really has to be super mega to grab people's attention. So I'm not going to spend too much time on it because they're challenged by geography, by the fact that American West has got 80% of the economics. Although it's good that they've got a carry, but for it to be economic in that geography, it has to be incredible. So good work, keep going. I'd like to see more money being spent on it. For it to get real traction, you've got to start opening up even more high-grade intersections. This has to be a dripping roast for it to fly in those geographic conditions. Right, another minnow, Turmalina Metals. Turmalina, there's a clue there. This is a company which is focused on tourmaline breccias, which can often be very high grade. I noticed that one of the technical advisors to this company is Doug Kerwin, who's a huge fan and a proponent of tourmaline breccias. And if you look at the share price over the last 3 years, it's really struggled. They are drilling epithermal veins and tourmaline breccias in Argentina. This news release came out on October the 10th. They've hit some high-grade gold and a new copper-gold mineralized breccia pipe. In the breccia pipe, they got 34 meters at 0.63% copper for 21% meters. What can I say? I mean, the gold grades look quite encouraging. I think really what they've got to focus on gold, of course, in a vein system is always about continuity, so grade and continuity. And in the breccia pipe, remember, in a breccia you can get very good grades. The challenge is getting the volume. So they've already got the San Francisco breccia, which is high grade. This is the new one that they've tested, the Ethan breccia pipe. And you can see here that they did just kind of a 2 holes off the same pad. Got some good, sorry, they got some good grade coming this way and some less good grade that way. So work in progress. I'd like to see them continue the hunt, although with that share price, raising capital will be difficult. So maybe politics in Argentina might breathe a bit of life into this. So good luck to Molino. And there we are. That is it for this week. I hope you enjoyed these snippets. I look forward to speaking to you next week. Thank you very much.